Muddy Waters is a son of a bitch. Ooh. This video is going to be on SoFi Technologies, ticker symbol SOFI. And as of recording, SoFi just announced a $3.6 billion loan promise for business with the LPB, with the loan platform business. So let's look into this. SoFi expands loan platform business with multiple new agreements totaling over $3.6 billion. Is this, if your company is accused of being a scam and it's allegedly a scam, would you be getting more business? Up to $3.6 billion of more business? No, as I said before, in a forest fire, the trees that are closer to the campfire, the trees that are on shaky ground, or the trees that are inherently hollow and dry, die first. They burn in the fire. The ones that are left end up getting all the resources from the burnt trees, right? In other words, I don't know why I'm using this analogy. When you have all these other, I guess, businesses or whatever, financial institutions giving out bad loans, giving out really risky loans, and those loans default, there is a flight to safety, and SoFi offers that flight to safety. But let's look into this. Today, SoFi announced the expansion of their LPB, committing over $3.6 billion in personal loan delivery across three new partnerships. I want to talk about this as well. When there is no concentration risk, or there's not that big of a concentration risk, right? It's not one new partnership, right? SoFi's LPB is attracting more and more customers. Continuing, SoFi closed an LPB transaction with a leading global bank for an expected loan delivery of $1 billion, and a separate LPB transaction with a financial services and insurance group of $600 million over 12 months. A leading global bank, not some bank down, not some personal bank down the street. A leading global bank. Additionally, SoFi agreed to terms on a new partnership with a top 5 global private asset management firm, expected to deliver up to $2 billion over a 2-year period. SoFi's LPB refers pre-qualified borrowers to loan origination partners, as well as originates loans on behalf of third parties. These new continued strong demand for personal loans from both members and debt investors. As I said before, SoFi is their customers, right? They offer a really good product to their customers, but additionally, right, customers like you and me, anyone that banks on SoFi, anyone that's on SoFi, anyone that gets a loan through SoFi, we're getting a good product from SoFi. But additionally, the customers that SoFi has is their second product that they offer to these people that need to lend money out in order to earn money, right? SoFi's customer base, their high quality customer base, their customer base of Henrys, high earners, not rich yet, is a very, very sturdy, safe, and profit, or I guess really unique customer base, really unique product for these people that are investing in personal debt. Adding 3 new partners to our growing network shows unique value of our LPB to asset managers, institutional investors, and partners more broadly. Unique value to our LPB to this second group of their customers, right? Their first customer is us, the people that use SoFi. Their second group of customers is these people that want to invest in debt. By connecting borrowers' demand with institutional capital, we are building a capital-light, fee-based business that complements our overall lending business while leveraging our existing technology First of all, capital-light, fee-based business, right? They're basically just getting the fees, right? They're basically skimming fat off the top. Even while doing so, they're offering a really good product to both of their groups of customers, right? The people that need loans and the people that want to give out loans. And this is everyone that complains about the tech platform, I want to highlight this sentence. While leveraging our existing technology platform capabilities in underwriting, pricing, marketing, and servicing. People always complain that the tech platform is a bruise or some type of like handicap of SoFi, right? Something bad, like a mark on SoFi. It is exactly their tech platform that basically enables a loan platform business. Right? It helps. It's their tech platform that enables them to underwrite, price, market, and service efficiently, and optimally. And this is just a highlight that said in 2025, SoFi's loan platform business secured over $10 billion in commitments to meet strong borrower demand. First of all, strong borrower demand. I forgot what the specific numbers were, but SoFi turned down. Right? Remember, they said that they had to reject, I forgot how many millions of dollars of loans. The number escapes me right now, but like there is high demand to borrow from SoFi, and SoFi is rejecting a majority of them because their credit box is so low, because they want to be safe, right? They want to stay away from the campfire so they don't get burned, right? Unlike the other companies that are just loaning to anyone that needs to, buy groceries, they need a loan to buy broccoli or something, right? SoFi's not doing that. So that's this new what do you call this? This new news article thingy that was just released by SoFi. So I wanted to mention something that happened earlier today, which was Citron research on VCX, right? So there's a short report that happened on the VCX, and the stock basically cut in half. Let's look at the stock price. It basically cut in half from over 400 to now it is at 238. And the short report was released at, let's say, probably here, 9 a.m. And right now it is EST 1:20 p.m. Right, so that is over 3 hours. I want to remind you that when Muddy Waters released their short report, by here the stock already rebounded up. I can probably find it, but I'm too lazy. So fine. Come on. Damn it. Did it say Meta? Why did it go to Meta? What? Okay, I don't know why it's going to Meta for some reason, but what does that say? When that basically means that this Citron research, people believe, people notice, and people are affected by this report because there's actual substance to this short report versus the short report that Muddy Waters did on SoFi. There was no substance to it, right? It rebounded within like an hour and a half. So I made some notes. I took some notes on people that are saying, oh, but it's still private credit, and private credit is bad, right? But I want to talk about the type of private credit that SoFi offers, that SoFi is taking on, right? It's not the type of, so yes, private credit right now is kind of scary, right? But you have to look at what type of private credit it is. Are you giving loans to stupid AI companies that are just wrappers around LLMs with this startup vision, and they have no execution, no history of execution. They have no collateral because it's just a startup with nothing, right? And it's basically just a lotto ticket, right? You're just giving money to the startup and hoping that it'll succeed. That's what private credit is right now. That's what a lot of private credit loans are. It's to these businesses that people think are high flyers in a time when AI companies were all the rage, right? 2024, 2025, when you have all these AI startups popping up left, right, and center. Those were the companies that a lot of private credit was loaning to, right? Secondly, are you giving loans to people that need to take loans on groceries, right? Are you lending money to someone that needs that money to buy broccoli or to buy carrots or something, right? Affirm and Klarna. No, that's not SoFi's bread and butter loan business, right? Are you giving loans with absolutely zero collateral or default protection? Remember the Blue Owl loan to Meta and their data center? Meta could just leave and then Blue Owl would be holding the bag. But that's not what SoFi is doing, right? They're not doing that. Because SoFi, right, the loans that SoFi has, management has talked about this multiple times, right? They look at the data, they look at their history, they look at what their current potential borrowers are already borrowing. They look at their payment history, they look at all these things, right? SoFi is creating this ecosystem, which makes it easier and easier for SoFi to get more and more data, to look at their spending habits, to look at their net worth, to look at all their financial history, right? SoFi's, this is what I said before in a previous video. SoFi's flywheel is also a data flywheel, where you have all the data in basically the entire financial life of their customer in order to determine whether or not this person is safe to loan to, right? For example, one data point they might look at is, okay, so this person has credit card loans. Should we give them a personal loan, or should we offer them a personal loan? Well, let's see their payment for their house, right? Are they paying off their house at a regular statement or at a regular time? Do they have direct deposit? Is their direct deposit still coming in, right? How much is their net worth, right? They look at all these things, then they say, okay, well, if they're going to pay off their house, they're probably going to pay off their credit card because they wouldn't want to risk losing their house over a $500 credit card loan. And then remember, SoFi's capital light business is ramping up. Right now, it doesn't look like it, right? Because their LPB and their loan business is going up basically at the same rate, but that just goes to show you how strong the demand is for their loans, and also goes to show you the growth rate of both, right? Because they are increasing in revenue, they are increasing in EBITDA and all those things. So I wanted to end this with, maybe if there's a few things that might be bearish for SoFi that bears might look into and might remark or might highlight, which is, first of all, rate hikes, right? Rate hikes are now on the table, which is the complete kind of 180 from like a month ago when no one was thinking rate hikes would happen. But you have to remember, SoFi has been executing already in a high interest rate environment, right? Switching to rate hikes, that is basically the status quo that SoFi has been executing on all cylinders throughout the past few years, or I guess 2022, 2023, right? SoFi has already experienced this. This isn't something new. This isn't some surprise or anything. SoFi's already used to this. They just have to continue what they're doing, right? We want to look at home loans because home loans were expanding really greatly. But when you look at the housing market right now, it's kind of been stagnant. It's kind of slowed down. But you also remember, who is SoFi's main customer base? It's the Henrys of the world, right? The people that are just starting a family, that are just becoming successful in their business, right? And who's more likely to want to buy a house even in a time of high rate or high interest rates? It's probably the people that are about to start a family, right? It is exactly this customer base that SoFi caters to. The Henrys of the world, the people that are just starting out and are executing, but they haven't reached what they want to reach yet. They haven't achieved richness yet. Maybe they have high income, but their net worth isn't as high, right? We want to look at student loans, what's happening there, right? I think there was some news regarding student loans earlier in the week or 2 weeks ago, but I forget too much. Tech sector in Galileo, right? This is what everyone points to. This is I guess this is a big bear case. Don't give me how they report their loan. Don't give me like fair value accounting or whatever like that. That's just stupid, right? We've debunked that a bajillion times. But student loans, maybe there's gonna be something with the government and giving, or like I guess selling some student loans to SoFi, right? Or like, will student loans be a problem? We don't know, right? And this is something completely different. I don't know why this is in this sector, but we want to look at brand awareness. No one's talking about this. No one is talking about this. But who remembers when everyone was talking about brand awareness? Look at upcoming events. Notice something important? Do you see it? The FIFA World Cup is happening at SoFi Stadium. The FIFA freaking World Cup. And I understand, right, that during the World Cup, SoFi has to basically remove all their logos. They have to sanitize everything so that only the sponsors of the FIFA World Cup can be advertised there. But the things that happen at the World Cup, right, they make multiple improvements to the stadium. Right. So, for example, one thing they might do is they will rip out the turf, the plastic, the fake grass from the stadium, and they'll install real grass, right? Which is definitely seen as more of a, it basically adds value to the stadium, and it creates more demand for people that want to host events or host sporting events. They are more likely to pick SoFi because they have better equipment or better just offerings at the stadium, right? So even though they can't directly advertise while the FIFA Cup, while the World Cup is happening, right? You do get these long-term benefits in the future. And also, continuing, you have this BTS World Tour. I mean, if you look at BTS Army, that's kind of crazy, right? You have Bruno Mars, you have Kanye right now, right? All these people, during this entire time, SoFi can continue increasing their brand awareness, right? They can continue attracting customers to joining the SoFi ecosystem by offering them those 25% perks at SoFi Stadium. And then what's happening next year, 2027, Super Bowl, what is that, 61? Is that 60? Yeah, 61, right? This is also big, right? Bruno Mars is also big. Like, you could say I'm counting pennies right now, but these are events, these are opportunities for SoFi to increase their brand awareness. And it's only going to keep getting better, right? This is just advertising. But because SoFi offers a better product, right? They offer those higher interest rates. They offer all those offerings, right? They offer the 1% match and all those things. Even without the SoFi stadiums, SoFi, because they have a better offering, they don't really even need the marketing as much as other companies do. So I just wanted to really talk about that first article that we mentioned before, right? The $3.6 billion that entered the LPB. And it just shows you that the Muddy Waters short report, or short whatever, is complete BS, right? Because as I said before, it said like global leading or like top 5 private equity asset manager or whatever. You don't think they've done their research, right? You don't, if personal loans are so bad, or if private loans are so bad, people would stop investing in private loans, right? But again, SoFi is the flight to safety. People that were investing in those riskier private loans are now moving to SoFi, right? They have a track record. And I think that even though the stock price is depressed right now, it doesn't matter, because it's not like SoFi needs cash. They don't need to raise cash. SoFi doesn't have to come out to refute or to rebut whatever Muddy Waters report said, right? Because SoFi just keeps on executing, and you let the execution do the talking. You let SoFi's work and their customers and their reputation do the work, rather than actually I guess physically, or coming out and actually just rebuting or rebuttaling the Muddy Waters stupid short report. And even though the stock price is down, I believe in it, right? I believe in the company because the company just keeps on executing, right? As I said before, the stock price is often detached from the company fundamentals, because people always say, oh, in the short term, the stocks are a voting machine. In the long term, it's a weighing machine. And you just have to wait out the voting machine, because eventually SoFi's fundamentals will be reflected in the stock price. So this video is on SoFi Technologies, ticker symbol SOFI. Have a good day. Peace.